Hey everybody, Boris, Schlossberg, BKTraderFx. I want to talk this week about the idea of reducing risk because this is the difference between professionals and amateurs. Amateurs are always focused about making rewards and assuming more and more risk. And professionals are always focused about controlling your risk and taking risk off the table as soon as possible. Nothing could have exemplified this better than the euro-dollar trade we did this week and the euro-pound trade that we did at the end of the week. Let's take a look at the euro-dollar first. We get long 47.77 around Monday afternoon thinking it's going to go higher. We like the event risk ahead of us, and we think it's going to go to all-time highs. Well, Monday happens, Tuesday happens, nothing happens. Basically, the thing just sits there, flutters, even flutters all the way down. The event risk doesn't work out as we expect. And now we're facing Tuesday afternoon with the following idea. We're in front of FOMC, which is a very big event. We never like to trade ahead of big events. Nobody's quite certain whether it's going to be 50 or 25 basis points, and that's going to determine how well the euro-dollar trades. But we still want to maintain some position in the euro-dollar because we think that there's a potential for it to go higher. So here's what we do. I make a Solomonic decision, and I say, let's take half off, and let's keep the other half. This way, if we're right, we get to participate. If we're wrong, we've reduced our risk substantially. And this turned out to be a perfect trade because we took off half. And as you can see, euro-dollar bursted all the way through 48.10, 48.11. We made 34 points on the trade. And then we walked away pretty much flat for the rest of the time. Now, this example is really exemplified in the euro-pound, the idea of removing risk, because the next trade was even more interesting. Here we are. We get long euro-pound around 74.68, like right around here, for two reasons. We think European data is going to be hot, UK data is going to be cold, we're bullish euros. And as you can see, pretty much price action goes our way. It stays stationary, then it starts to really rally into the event risk. And this is what separates the pros from the schmoes. Because let me show you exactly what happens. 2 o'clock. Right before 2 o'clock, the thing gets very close to our T1 target. And I decide to take profits on half of it because, of course, even though you're confident about the event risk, you're never certain that it's going to work out your way. As a matter of fact, we take profits right at the top tick, 74.92. Event risk comes out, and guess what? We were absolutely wrong on their analytics. But we've made profits on the first part, and very, very soon, very afterwards, we got to take it out on the break even on the second part. But it's a perfect example of how you maximize profit by minimizing risk. That's the lesson of the week. BKTraderFx, Boris Schlossberg. We'll see you next week with more trade ideas. Wishing you the best.